welcome to Trading Lounge and the indices, and we're looking at the cash market, the SPX. Now we've got a triple witching happening on the 21st, on the Friday. We've got Equinox today, tomorrow. The March Equinox, when we have a bear correction, is always a good place to have a low in there. Obviously, the equinox for the the seasons, and the accounting tends to follow the for the seasons, and when then we've got the options expiries and the futures expiries and so on. So we were looking at this Thursday, Friday to be the low in the market. We may already have the low in the market, and we've been talking about it yesterday, so we're going to be talking about that. But just before we go there as well, this is the large account. So I'm on a weekly chart here, and so we're looking at wave 2 here going up to wave 3 here, with 5 waves here, with 1 and 2 and 3, 4, 5 up here for the third wave, the fourth wave, and then the fifth wave anywhere between 72 and the 8,000 up here, and then we'll have a larger wave 3 at wave 3 here and wave 4 here at that particular point in time. So that's just the bigger picture. So when we go to the daily chart here, and we know that Donald's tariffs are playing sort of havoc with the markets, but I mean, he switches and chops and changes quite quickly, so anything is quite possible. But yeah, we've seen they can do a lot of damage, and the evidence of that is the 1929 crash. That was also exactly the same tariffs that were basically played out at that particular point. So they created that bear market down into 1932. So that's a bit of an issue, but we'll see. In terms of our expanded flat here, we're looking for an ABC pattern. Now, as I've mentioned, from B to C here, some of the structure is very easy to count. Like, we can count 5 waves to here quite nicely, and then wave 2. And some of this in here and in here can be interpreted in different ways, which makes it a little bit tricky. So as I've mentioned, we've either got wave 5 wave C low in here, or we've got one more little move to the downside. So we're looking at it like this, and yesterday we were looking for that first impulse wave up off the low, and then looking to go long above that. So that, and then the idea was to improve on that, to bring this down to the second high here on the B wave and those sort of things. So we'll investigate that in a moment. It's still quite possible for this wave 4 to be here, or even to be over here for this, and still have another move down at this point. So we do need to be a little bit careful as we sort of move along here, but the idea was to gather enough evidence to be on the long side, and that's what we've done. So just going into the 15-minute chart here on this. Yesterday what we were doing is we were looking for wave 4 up here and then wave 5 to come down, but we were also looking at this being wave 1 to the upside here as well. So we're looking at that as being wave 1 here, and then we were toying with wave 2 being here or being over here. So our process was that we would, from this low here to this high here, we had 5 waves, so we could go long above that. So we waited for the top to come into play, the top and the drop, so we were patient there. So then we had this particular move here for this, and then we were bringing it down onto the second high here. We had an ABC pattern. So we've breached this now. So when we So it's quite possible to have this here, by the way, five waves up off the low here for the A wave, the B wave, and the C wave up here, and then come down. So we still need to be careful, okay? But we're on the long side at the moment, and if I just drop down into let me just drop down into 1 minute here. So we've moved past this top here now, and we've moved up. So that's been triggered. Now this is the cash market. We don't trade the cash market, but this will be the same for the FTSE and the futures market, which we're going to look at now. Not the FTSE, the SPI here. So the SPI has also been triggered at this stage as well. So one of the things that we need to look at here is how we count this little move to the upside. So there'll be two ways to count this up here. We can look at all of this as wave one, coming into this particular high here area, and then the 570, 572, the trading level stuff. We could look at all of this as wave one and then have an A and B and a C here. So that would be like the worst case scenario at that point. Secondly, we could look at this as wave one to here and wave two to here, and then 3, 4, 5 to move to the upside. So the main thing is really just to keep the stop out of the way at this point over here for that. So that will be the SPI. We'll put this trade into the stock check, as I mentioned before yesterday, and then we'll just have a look at the E-minis here as well. So with the E-minis here, I'm just going to stay on this 1 minute chart here, and we can look at it from we'll just flick it back to the 5 minute here as well, because I want to get that data in here. So we're looking at 4 and 5 here, and looking at this as 1 and 2 here, and we can bring in these extra counts here. So I'm going to look at this as wave one up here, because the thing is that when you go through an old high, as you already know, sure, it could be a hot knife going through butter, or we can keep going, but most of the time it will have some sort of consolidation there and some sort of pullback at that point. But like we noted yesterday, we have a beautiful 1, 2, 3, 4, 5 up here. And then it's just, in this case, we could see on the futures, we could see the A, the B, and the C wave here for this, for wave two. And yeah, so there's two different ways of counting and building this particular structure here. So I'm not really going to worry about it today. We're just going to allow it to play out. And in a bullish market, we normally see Thursday as the bearish day. So we'll see this try to basically retest it for support, because yesterday we're talking about this number here, the 5.7, and we're looking for a classic trading levels pattern on this level here, because this would end up being the balance point in here. So really on this one here, you know, once you've got this here, we could go long above this top here and the second top and the third top. So somewhere in here, you would have had your first position, and you may have gone long above the B wave here. So these, you may have one position in here, you may have two positions in here. We will be definitely adding on top of the 5.8 here once that plays out. That's the minor level there. So yeah, we're going to continue to build this. So you may have one or two positions in here. So I'll just leave that. So they might be tested. I mean, this has already been tested here. This number here, the 5.7, it's already been pushed back and tested. But this top needs to be tested. So the push up and a push back deeper into here before moving to the upside. So yeah, I can count this up here in two different ways, because basically it works like this. You either get a little 5-wave move like this, and then you get the ABC here, nice textbook stuff, and that's all cool. And the other one is that you end up getting 1 and 2 and 1 and 2 and 1 and 2, and then sort of it builds up like that further. So there's different ways to view how that impulse structure can develop and build over time. But that's where that is. Let's have a look at the NASDAQ. So with the NASDAQ here, we're going to call the low in here as well. And it's interesting that the futures market coming down here didn't make a low below this one here. So we do need to be a little bit mindful. With this situation here, we've got the 20,000, which is a major level. And we as I mentioned, we could have gone long earlier in this piece here above the B wave, but we decided that we would wait and get a tested support on top of the 20,000 here. So in a nutshell, we're looking for a classic trading levels pattern here at the 20,000. So once we will go up to the 20,000 again and it'll react. So we're looking for that first high above the level and then the pullback, and then we can go long above this one, or the third one over here. So I can draw that out, and yeah, on a 15-minute chart here, I think it's moved up higher. I'm just going to pull the data in from 1 minute. Yeah, so it's pulled up higher here as well. So once again, I can count this up here in different ways, but whichever way you're going to count it, we're going to end up with that's going to be the support area, and this is going to be the resistance here, of course, and so on. So whichever way you look at it, this market is going to struggle across that 20,000 in its own way here. There's two ways that it can actually go through. Actually, if I just bring this back here, this is the most common pattern, trading levels pattern 1, where it has the first high above the level and then drops back below the level here. There is the second most common pattern, which is this one here, where it doesn't drop down. So this move here is normally a strong move, and it's normally in the parabolic sort of stages of the market. Yeah, I mean, it's quite possible because we're in a strong part of this here. We're at wave 1 and 2 here, and then 1 and 2. So it may not, I'd expect it to drop down somewhere into the, somewhere into this particular space. So we'll just see how this goes. I'm sort of more inclined to be looking for trades on the late Thursday afternoon and Friday morning. That would sort of line up with the bullish weekly cycle at that point. And I want to have a look at we've been talking about the bullish side and going long and having a low in place, but now I want to just have a look at the triple Q here for a moment, and we'll look at it in both ways as well. So in this case, the market has moved above the 20,000. So the futures market is in front, which is good. As I mentioned, there's a triple witching on Friday as well. And now that this second high is in here, we can bring this over to the second high here now. So if you're trading the futures or you're trading CFDs, then this will be in play here, and we can look to go long at this point. Like I said, this particular move up here could be counted in different ways. But this is just the basic way of 1 and 2 and 5 waves here for the 3rd, 4th and 5th here. So that would make wave, I've got a larger wave 1 here. It could actually be a smaller wave 1. I could have this wave 1 here is sitting over here, which I have in most of the other markets. So this could be 1 and 2 here and 1 and 2 here. It doesn't really matter. This is where you need to go long, okay? If this is the reason I've done this for is because if this is wave 1 up here, it can pull back to wave 2, down here further in all of this. So that will be sort of interesting. But what I wanted to talk about here more so we've got the trade set up there. That's cool. And I just want to talk about this particular market here, because this situation, so we know that that's actually gone up there now, okay? It's just not on the 15-minute chart, just the way that the data is, so this low here hasn't really taken out this previous low over here on the futures. It's not a big deal, but it's a box that's not ticked, and it's got its own sort of weight on that. So that means that this wave 4 here can be placed over here for this, and then this wave 5 here would be over here. So that's the risk that we're in with this. So that current top there can be a wave 4 at that point. We don't come back for a wave 2. We can come back for a wave 5. I do think what will probably happen is that this little move up here that we've got already will be something like this on the Thursday, and then the Friday will push up, and then the Monday will push up, and we'll start seeing profit coming in on the Tuesday. But we'll see how that triple witching plays out as well in all of that. So just to point out that, you know, there is this sort of bearish case that we need to, you know, still move past. You know, we've been working it for a little while, but yeah, you know, we're doing all the right things at the right time for this, you know, so that's good. And let's move over to the DAX and the FTSE. Now, the DAX and the FTSE, they have been more bullish than the US markets. So you can see here on the DAX futures market that that we haven't pulled back, you know, like the US markets have done. In fact, it's held quite nicely up here on this daily chart. Just going to pull into the 15-minute chart here and look at this top here. We better load some of this up here. So we're looking at wave 3 and 4 here, and then yesterday we were looking at 1, 2, and then 1, 2, 3, 4, 5 up here for the third wave, the fourth wave here for this. So we're looking at the moment at this being 5 waves up here for wave 1. So we're looking for the first 5 waves in this little move here. So I'm just going to drop into the, okay, that's captured the other part of the market. So basically we can look at this here now as 5 waves of 1 and 2 and 3, 4 and 5 up here, and I'll just drop that back into the sub level there, and I may have already had that in there. Fine, no, that's all good though. So that's basically what we're looking at here at the moment. Let me just have a look in here. Yeah, so that's 1, 2, 3, 4, 5. So 1, 1, 2, 3, 4, 5. So basically here you'd just be looking at a whoops a daisy. Here we'll just be looking at a wave, a B wave and a C wave coming back into the 62% area and then moving up at that point. So that's where that is at the moment. I mean, it could get, this wave 4 here could get a bit uglier, but it's quite a nice size as it is at the moment, you know. I mean, it does sort of count down as 5 waves as well, but we've got overlap here, so we can look at this as wave 1, 2, 3, 4, 5. So it could be an A wave and a B wave and a C wave. So if you wanted to be a day trader, you could trade the top of that structure there, or you could drop it down onto the B wave here once you get that. But you don't want to go long down the bottom because you don't know what we've got at the moment. And then in the bigger picture over here, we can look at this as being the B wave over here once this top is in play, and then pull it back, you know, and improve it over here somewhere further, even, you know, over this side here. So it just depends on, you know, how you trade and, you know, what you do and those sort of things. So I'll just leave that there for the look of it all, but yeah, you can go long above this top here now because we've got this structure there on that. And let's have a look at the FTSE. Okay, so it's the FTSE on the 5-minute chart here, and it's going back to the beginning of March. So we've got this top here as looking as wave 3, then wave 4, and then we're looking for an impulse wave to the upside. So we've been like most other markets, we've been counting this up here as being impulsive. So we've got wave 1 and 2, 1, 2, 3, 4, 5 for the third wave. Yesterday when we spoke, we were somewhere in here, so I can't remember exactly where we were, or were we here? I don't know, I can't remember. But anyway, we were obviously talking about the 8-7 being the balance line in that space. I don't particularly want to chase this up here. I want this to top and drop, and then we can pick it up, and we could, you know, we can improve on that a little bit later and so on. But yeah, I don't think there's much more to the upside here. I mean, it would be looking to make a new high above this one here. I think this is probably 1, 2, 3, 4, 5 for 1 and 2, and then 1, 2, 3, 4, 5 for the third wave. So the fourth wave and the fifth wave. I don't really think there's much there. Do you know what I mean? I think we just need to get past Thursday, and probably Friday we might be ready to go on this again. Of course, this impulse wave could build on itself and move a little bit higher. When you've got large numbers with a lot of zeros on them, the market gets pulled to that number because of the larger orders being placed there. So that's why we've got overlapping wave structures between here and here for this one. But yeah, I think this is 1 and 2, then 1, 2, 3, 4, and even wave 4 is overlapping here, and then 5. It may or may not even be finished for 5. We've still got another high to make and another high over here, and I just think that this top and drop as well, and we'll see how it plays out at this point. Okay, let's have a look at the Aussie. So on the 15-minute chart here for the futures market, the SPI, and as I probably mentioned, the 8,000 here is really the level that we need as a tested support to really confirm that we've got a low in place. So, but with that in mind, we'd also like to get there a little bit earlier and look for a position below the level, the 8,000, and then build above the 8,000 as well. So whatever the count is going to be, we're going to see the market come up close to the 8,000, and then we're going to see it react from that, as I've got as I've got here now. Yeah, sorry, I was just sort of thinking about this correction here. I mean, I've got this here as 1 and 2 and 3 and 4 and 5 here, and then the ABC pattern. But I'm not that confident with what I've just done in here for this. I mean, when I count here, I can count the 5 waves up here for 1 and 2, and then 1 and 2 and 3 and 4 and 5 here. I could even put this as wave 4 here, and this one here as wave 1 here as well, by the by, and then look at this as an ABC for 2 here, and then we wouldn't this wave 2 over here, so then we wouldn't come back below that again. But I just thought that I would take the more scary path and put this over here and look at it like this here, because this will keep us on our guard a little bit. It'll keep wider stops and so on. The other little point that I need to make here as well is that I could put this wave 4 over here, and then have this as 1 and 2, and then this one here is 3, 4, and then 5 to the upside. I don't think that we need to do anything at this particular point. You may have a position in here already, because I think that we may have talked about going long above this top here. I can't remember. But yeah, I wanted to give the worst case scenario. So hitting or coming close to the 8,000 and pulling back here would be it. So Thursday in Australia has got a habit of opening higher and then trading lower for the day, and then shoring up in the afternoon and making a move. But this is kind of, this is more in line with the S&P here than anything else. So this has probably moved along a little bit. I'll just have a look at this. I've not pulled it in at the 5. I'll just pull it in at the 1. Yeah, right. So that's already sort of pulled there. Now, is that... Obviously, we've got wave 1 here. Can I look at this? That if I start from the other end and look at that as... If it drops a little bit further, like takes this top of this one out here, then we got a top in play. But I'm just wondering if we got this as 1 and 2 here, and then some 1, 2, 3, 4, 5 for the third wave here, the fourth wave and the fifth wave, and we've got that in. I think we have. But then the other thing too is that that even though I can count these 5 waves here, it was this one that bothered me here, this move up here, as you know. I don't know if I got it as a triangle here, as an A and a B and a C and a D and an E here, but I mean, this looks impulsive to me, this move here, which is the low here for that. That can be counted as corrective. Yeah, Yeah, maybe, I'm not quite sure. But look, we're going to make a move on this tomorrow. And what I was sort of thinking, if this pulls back as wave 2 here, then we find a way in over here for this, and get a small position here, and then look to build. I like to get one close to the 8,000 if possible, and then just definitely be building in, through 1, 2, and 3 up here, and probably even more. Some folks just like to have one position. Other folks, I always think it's good when you're trading trading leverage short term, is to kind of at least have 3 positions, because that way it gives you a bit more versatility in you can take some profit off in one contract and those sort of things. But if I'm in a trend, I don't trade this market anymore. Don't have the time. But I'm quite happy to build in 20 positions. I know it sounds a bit crazy, but you get one to break even or half to break even, and then you get the next one in there, and then the next one, and and you just keep working it and working it and working it. That's yeah. So let's just see how it goes tomorrow. Let's see if we can get some position over here. I'll leave it on the B wave here for the moment, just to get one under here, and then we can build. We can build on top here. So we have to wait for the first high above the level there for that, of course, as well. But let's see. This will be like wave 1 coming up here, and then that will pull back, and then we've got a setup here as well. So hopefully we don't miss it. But yeah, all in all, it's looking quite good in terms of looking at an impulse wave up off the low here for this. But being on top of the 8,000 would be nice, because being under that is a bit of a problem, because we could look at this as an A wave to here, a B wave and a triangle, and a C wave, up into the 8,000 area here, So we'll just we'll wait one more session, and we should be good to go on the Friday. Okay, that's it. Thanks for tuning in. Cheers.